Hi folks, and welcome to Tech Talk. My name is Anu. My guest today is Cindy Padnos. She's the founder of Illuminate Ventures. Come join me. Hi Cindy, and welcome to the show.
Thank you. It's great to be here.
I'm so happy that you're here. Now, I would like to go back to your very beginnings. You were born in Holland, Michigan. You are one of 4 siblings. Your parents were immigrants, were children of immigrants. Your father was a CEO and a co-founder of a small family-run business. And that business still exists today, and I guess is being run by other family members.
Right.
Your mom was a homemaker, and she was sort of the spirit in your house of a lot of fun and joy, and she exposed your children to a lot of interesting foods and things like modern design.
That was my mother.
That was your mother. Yeah. You have described yourself as being very hardworking and reasonably extroverted. Mm-hmm. And you're the most influential people in your family, in your life, have been your family. You have a lot of respect for entrepreneurship. Growing up, you didn't fear much. And here you are. You are founder of Illuminate Ventures today. You are one of the most influential women in technology. You have, over the last 25 years, accelerated a lot of emerging tech by way of entrepreneurship, by way of advisory, by way of investing, and also board membership. Tell me the story of how Illuminate Ventures was founded.
Okay. Well, first of all, thank you. That's quite an introduction. So Illuminate really came about as a combination of passions for me. I had been in several different kinds of roles in my life, as a corporate executive, as a consultant and a management consultant, as a founder and CEO. And I had gotten to a point where I felt like I wanted to leverage all of those skills in one place. And I frankly, almost accidentally, after the company I had founded was acquired, I was invited by many of the VC friends I had to come in and help them, and to be effectively a part-time venture partner with a few different firms. I did work with many firms you would know, with Moore David Dow, with USVP, with Scale Ventures today, many. And I learned the trade from some of the best people in the industry. I had opportunities to watch and see people like Rory O'Driscoll at Scale and Nancy Schoendorf at Moore David Dow and others, see how they operated. And it was because of that, effectively consulting kind of role that I was playing that I discovered my passion for venture. I ended up joining a firm for about 4 years and building a track record there and learning more of the operational aspects of being a VC. And then in 2009, I took a few crazy pills, decided I really was still an entrepreneur, and launched Illuminate. So it was a pretty long career. It was a combination of wanting to put all of these different skill sets I'd built over many years to work. The partnerships, the relationships with entrepreneurs and corporate executives and other VCs, putting all that to work in one place. And perhaps maybe even more fundamentally, realizing that the world had changed. It had changed in a lot of ways, but the public cloud suddenly enabled companies to get started on a shoestring with no outside capital at all. And here we were at the firm I was with at the time, still writing $4 million Series is the first money going into a software startup. And it just didn't make sense anymore. So I decided to launch Illuminate as a micro VC fund, as we call them now. That term didn't exist. But as a seed stage institutional fund. And started actually originally by investing my own capital, warehousing a few investments for our initial fund, and then raising an institutional fund.
Gosh, so interesting. Okay, what is the size of your fund, and what are the sectors that you're investing in?
Okay, sure. So we've had 3 funds. Our first was proof of concept fund that started with those warehoused investments. We actually, I guess it was, I call it intellectual integrity. Now I just think it's stupidity. But at the time I thought, you don't give a sub $5 million fund a Roman numeral. So I called that the Illuminate Spotlight Fund. Okay, really cute, I know. And then we had Roman numeral 1. We're now investing out of Roman numeral 2. Fund 1 was a $20 million fund. This is a $30 million fund. In terms of investing focus, we are, and have been since our inception, exclusively B2B or enterprise, depending on which school of thought you like. But I hesitate usually to say enterprise because people assume I mean large, only products for large corporations, when in fact some of the companies that we're investors in serve all of sorts of SMBs as well as larger companies. Yeah.
Okay. My next question to you is, what is one very important thing that you look for before you make an investment in a startup?
Well, I think the most fundamental is always the founding team. You can have a great market, you can have great technology, but if you don't have founders with passion and integrity and vision, you really don't have anything. Right. So that for me is always number one. And you know, when I talk to entrepreneurs about it, I urge them to think the same way. You know, you can get money from lots of different venture firms if you have a high quality team and product. But in the end, if you build a really sustainable business, you're likely, especially in the enterprise space, you're likely to work with that person or that team of people for 6, 8, 10 years or more. So pick people that you trust and that you think they can add value to your company, not just write a check. I mean, I've sat on the board at Bright Edge, which is running at close to 100 million in revenue today, from 0 revenue to that, and our first investment in them was 10 years ago last month. So that's a really long-standing relationship, and one I'll always value, but it comes about from both the entrepreneur and the investor being thoughtful about that question.
Of course. Tell me about some of the companies that you have invested in.
Oh gosh.
If you're able to.
Well, I love my portfolio. Are you kidding? I could talk about them all day long. They're like my babies, right? So you know what? One of our companies that's has been quite successful is a company called Exactly. We were early investors in that company, and in fact, that was one of the warehoused investments that I had made. They have gone on to become the market leader in the whole sales compensation management arena. We took them public in summer of 2015. They were one of only about a dozen SaaS software companies that were able to go through an IPO that year. And then they were acquired last year for over $500 million by Vista Private Equity. And they are now, it's not just the acquisition that I'm really proud of. Vista's strategy is to create certain platforms and other tuck-in kind of solutions under those platforms. And Exactly has become one of those platforms, meaning it's a really strategic asset for Vista, and likely to see yet a third great exit, if you will, all in a span of a dozen years or so.
That's fantastic.
Yeah, so that's one. I mean, we have one of our more remarkable companies is founded by identical twin sisters. It's a company in Vancouver called Allocadia. And what I love about them, what I love about Allocadia, well, first of all, I love the founders, but beyond that, you know, there's just a proliferation of marketing automation tools today, thousands of them. And then up above that, you have your whole ERP systems. And what has not existed until these guys came along was a system that sat in between and said, okay, you need to do planning and budgeting across your entire marketing organization, and you need to do spend management and account-based marketing, you know, through all of these tools. How do you plan for that? How do you budget for it? How do you measure performance across all those tools and know where to allocate dollars next time? And that's what Allocadia does. As the name kind of goes with that, right? But it's a really interesting company and platform, and also kind of remarkable about it, they were one of the first companies that I saw that really had taken advantage of the public cloud in the way that I had always expected it to happen. Meaning, they had bootstrapped the company to over $1 million in recurring revenue with less than $500,000 of angel money in the company. And that's a scenario I'm now seeing play out with our fund, our third fund, in a way that I frankly had expected even earlier in this whole life cycle of SaaS, but it's happening now, which is pretty cool.
That is cool. Pretty cool.
4 investments out of our new fund, all 4 already had product and some initial revenue, and yet we are still their first institutional round of investment.
I see.
Yeah, so very interesting.
Very interesting.
Yeah, for me.
Yeah, no, absolutely. So, Cindy, tell me about what is your decision-making process when your investment decision-making process?
Okay. So we use a variety of different sources of data as we approach making an investment decision. But as you can imagine, when you're doing early stage investing the way we are, there isn't a lot of data, frankly, the company can give you. They don't have a track record of how many customers they've closed per quarter and all of the rest, because they may have no customers. They may be very early in the process. So we do a variety of things. We work with interns during our class year to gather a bunch of data about the actual sector that company's operating in. We call them, big surprise, sector assessments. And we look across the whole landscape. So that's one element in the mix. We obviously are talking, because of what I said before about the entrepreneurs being so important, we talk to people they've worked with in the past. So it's not per se just customers or business partners, but their peers in other organizations, their managers in those organizations. And we really try to understand what kind of grit they have, what kind of tenacity, and how they approach problem solving, and even how we can bring out the best in them. People who, when they provide you references, generally aren't giving you people they don't think will say nice things. But what those people can do way beyond that is tell you about what it's like to work with that person. Sure. And how best to work with them. We are looking at competition. We are looking at market size. We are looking at the depth of knowledge that the team might have about the domain that they're building product in. That could be technology. It could be an industry. It could be the market that they're selling into that they have, a great deal of knowledge about. But we're assessing all of that, and we do that as a team. We have 2 venture partners on our team, executive in residence, and we come together twice a week for those kinds of conversations. And we move pretty quickly, but we do things as a team. Sure.
Of course. What is your definition of a great leader?
I'm a pretty big believer in the sort of servant leader kind of a mentality, meaning if you can attract the best people, retain the best people, and get the best out of the best people, you're a great leader. It is not about even exactly what you accomplished, although that can be meaningful, but it's about who you surround yourself with and the passion and the vision that you can share that causes other people to want to march there alongside you. Right?
Makes sense.
It's about rewarding and incenting those people and helping them build their careers. And it's amazing how much of that comes back, is a reward, if you will, over time.
Now, there are some common mistakes that people make when approaching a VC.
Oh.
What are those mistakes? What are some of those mistakes that people should, really avoid?
Probably the most obvious one, and the one I hear the most frequently, is when asked the question, who's your competition? Who do you compete with? An entrepreneur will respond and say, well, actually, we don't really have any competition. And that's just silly. That's nonsense. And it's actually not to their benefit to even think that way, because the reality is everyone has competition, even if that competition is some manual process, some other substitute for how do I get this done in the world that I live in today without the great solution that you're going to bring me now. Okay, and I was pausing for a minute there because I was thinking, you know what, that's not entirely true in the consumer internet world, but it is in the business world. We're not inventing new things to do that have never been done before. Business people run businesses, and they may not have as good a data as they should have. They may not have the speed or frequency of refresh of the information they need, but they get the job done anyway. And so your competition might be, you know, same old way of doing it. Your competition might be the person who doesn't want to lose their job because automating it would cause you to need fewer of those people. But you really do have to think about competition in a much broader way in a startup than I think many entrepreneurs do. I think the other thing that I see frequently is that a founder thinks that it's so urgent that they have 2 or 3 other co-founders that they are willing to settle for people who might not be the absolute best people for those roles. Mm-hmm. And in a startup, you know, the issue you have is that you have to be so capital efficient and so focused that you don't get to hire 2 of anything. Yeah. And so the criticality of hiring well is super high. Yeah. And sometimes people in a rush to get going, they settle for something less than the quality that they should really seek.
Yeah, makes sense, yeah. My next question to you, well, I've been dying to ask you this question. I want to talk about your advisory board, your very big and very extraordinary advisory board. Tell me about that, and tell me what your goal was when you created it.
Well, I would say, first of all, I'm just kind of the luckiest person in the world to work with these people. It's folks like Sarah Fryer, who's currently CFO, COO at Square, and Ken Goldman, who just left Yahoo, and a whole variety of other people, and it's more than 40 people strong today. So it is a large group. I'm frequently asked, how do you manage that kind of a group? And my answer is, duh, I don't manage Sarah Fryer, Ken Goldman, Carol Mills, or you know, anyone else that's on this advisory board. But they don't manage us either. That's not really the point. Let's go back to your question around why. When I was a founder CEO many years ago, I also had what I called a business advisory board. It was separate from my board of directors. This is as well. And they were extraordinarily helpful to the whole company. And I brought people onto that advisory board, some who are actually on this one as well, like Dave Coulter, who was at Bank of America back then and now at Warburg, but people who could help not just me, but all of the members of our team. So I had, Mike Stonebreaker, who's just a guru in the database world for the last 30 years, who was an advisor to my VP of engineering, and other people like that. So I wanted to do the same thing conceptually with this advisory board. I started with 8 or 9 people. 2/3 of the people on our advisory board I had never met before we started the process. Every one of the people I've mentioned I had never known before. Oh, wow. And I designed it in a way that I said, I want to be able to help our portfolio founders, but I also want to be able to help our firm. So we've had the head of corporate strategy of IBM, the co-head of the Windows division at Microsoft, and it might not be shocking to you, but it might be to a lot of other people. Turns out that 2/3 of those people around our advisory board are women. So there was a strategy there as well that I really wanted to create an environment that was more inclusive and tap into people who had brilliant careers that nobody else was tapping into. Right. They help us with every aspect, or maybe you think of it as a life cycle of venture, from deal flow identification to due diligence to investing and mentoring and accelerating these portfolio companies to exit strategy, to, all of these things around that whole spectrum. Different people around that advisory council help with at different points in time. Yeah. And they've been an incredible resource to us, to our portfolio companies. Several of them, like Cliff Higgerson and Carol Mills and others have taken board seats within our portfolio for us where they have deep domain knowledge and can be even more helpful than we could be around the table. So honestly, I never envisioned it being as useful, successful, and fun, as much fun as it is. But it is. It's a ton of fun. We meet with them physically all together 3 times a year, but much more of the activity takes place outside of those meetings.
I see. Very interesting. Tell me about one of the most challenging times of your profession.
Ooh, I've had plenty of those. When you said at the beginning that I was fearless, I was like, well, maybe not so much. But yeah, maybe I'll pick, a situation when I was a founder and CEO of a venture-backed company. It was a company called Vivant. It was a very early company in the whole SaaS world. Before SaaS, it was actually back then called a application service provider, right, an ASP. We built the product multi-tenant, hosted it at Rackspace, sold it as a subscription model, but the public cloud didn't exist yet. And that decision alone was a hard decision. It was very, very early. This was in 1998, 99 time frame. And people were very skeptical about it. That was a very hard decision. But now, move forward. You get the timing. There we are in the bubble. The bubble is about to burst. And our lead investor was a publicly traded fund. There were very few of those then. There are even fewer now. Right. And I was warned by several people around the table that given what was going on in the market, they were not going to be able to stand by us. Their stock was tanking. I mean, it went from $200 a share to like $2 a share in a very short time frame. And I had to stand in front of our team of 60, 70 employees and talk about what we were going to do, how we were going to continue to run this company. The great news is that I ended up being able to deliver, to garner really 3 term sheets from public companies. And we were able to sell the company. But it was a very scary time. I felt a huge responsibility to our investors, to our employees, to our customers. And I couldn't control what was going on in the economy, right? So that was one of the toughest times. And what I'm thankful about is I had, before that, in my prior CEO role, I had been exposed to this whole concept of open book management. And through that, to the founders of the guys who had written the book, literally, and really admired that approach to management and decided to actually tell the entire team what was going on. We're running out of cash. We have only this kind of a time frame. I'm not going to prejudge any of you who decide you've got to leave and go somewhere else, but I'm going to be open with you. And every week, we would have a town hall meeting with the whole company. And we lost literally no one during that process. And we were acquired, and everyone who wanted it, had a job and all of that. But boy, it was scary.
Yeah, I bet. It sounds scary.
I didn't sleep well for quite a while.
Yeah, no, it sounds scary. Yeah. So my next question is, what is your opinion on strategies that could help women achieve a more focused growth within their organizations?
Do you mean in the large corporate world or in startups or what kind of environment?
That's a good question. Can you talk a little bit about both?
I can try. I haven't been in the corporate world in a very long time. I certainly have people around our advisory board that are. I think, when I talk with people there, and in fact, when I invited some of the people who are on our advisory board to join, one of the things they said to me is, you don't know how lonely it is here. That was kind of shocking to me to hear. I have spent my whole career in tech. I went to graduate school. Our graduating class was 10% women at Carnegie Mellon. When I joined AT&T, our management development program had maybe 20% women. When I've operated in the world of tech many, many years, there weren't very many of us, right? But it really has changed over time, and I didn't expect to hear that just 5-7 years ago from women at some of the largest corporations, enterprise software corporations in the world. Right? And so I would say if you can build your network, even outside of your own company, it's a really important thing to do. You need that camaraderie. You need, you know, some other cheerleaders, but some other voices to share their experiences and all of that with. And you need some fun. Yeah. One of the things I really discovered about this advisory board, I remember going to the first event, and we were going to have a reception afterwards. And I was pulling out some really nice bottles of wine to take with me. And my husband, Jim, looks at me and he said, "Wow, you're taking the good stuff." And I said, you know, first of all, this group of people, I'm so appreciative that they're doing this. But second, I have been in so many rooms in my life where I know there was testosterone poisoning. And you know, the men were all, you know, jockeying for position, et cetera. And I've never been in a room where, you know, I'm leading the event and this is my team, so to speak, and it's, you know, 2/3 women. And I don't know if there's going to be estrogen poisoning, and we might need some really good wine afterwards, right? It turned out, of course, I came home afterwards and he said, "How was it?" And I said, "Oh my God, I didn't realize how much fun I've been missing." Aww. I never realized how much fun it is to have a few more people around you who have a little bit more of your perspective, right? Yeah. Anyway, we have an incredible group, but I would say on the corporate side, two things, what I said at first, but also one of the things I heard from many corporate women is they are not known very well publicly. They put their nose to the grindstone, they spend so much time working, and then what's left they give to their family, and they're not the ones who are out there in the media and the press and gaining much recognition. I'll never forget, and I won't mention any names here, very senior executive in one of the 20 largest tech companies in the world saying to me, "I know I'm never going to be CEO because no one knows who I am. I am doing this and this and this, and I'm effectively running the company already today, but the outside world doesn't know who I am." That has to change. Right. You know, in the startup world, wow, there's just so many things you can do, and some of it's similar, you know, building those relationships and I think coaching and mentoring and helping the next generation behind you and bringing more people into your organization. Startups in particular have the opportunity to start early, right? They can build diversity into their team, and it's not just gender. It's ethnicity, it's religion, it's every aspect of our lives can be better, and the process of creating innovation is going to be stronger if you have people around you that have different perspectives. Right. You're going to create an environment that is a lot more innovative and where thinking is challenged all the time and where great ideas are inspired.
Right, right. What do you believe has been your greatest success in your career?
I don't know that there is one. Yeah, I don't think about it that way, I guess. I don't look for milestones per se. I think of life as a progression. Yeah. And I think what I've been able to do is build upon all of my past experiences with each new role that I've played. And what I hope to be able to do is leverage that in a way that it helps other people too. That it's not just helping me, that it helps our portfolio companies, that it helps advisors around the table. Not just being philanthropic or something, but because by helping others, it helps me too, right? It helps our firm, helps our success. Sure. And yeah, I don't know that I can point to one thing.
Yeah,
it's really
that was a good answer. Yeah. What's the biggest lesson you've learned in leadership?
Well, I learned that lesson about not settling for less than the best the hard way. I did that. I mean, when I was building the company I founded, it was truly the bubble years when finding great talent was extremely difficult. In fact, I mean, interesting story here. Just after I had accepted term sheets for investment, first round of investment, institutional money in the company, I decided I needed to replace my VP of engineering. Why? Because he kept wanting to build a traditional enterprise software company, meaning not this multi-tenant architecture and hosted at Rackspace and all of that. And I knew I wanted to go the other direction. And he just didn't get it. I tried multiple times. And I'm not an engineer. I can't build it. But I literally, so I went to my potential investors at the time, my lead investor and the second, and told them what I was going to do. Now, mind you, my angel investors told me not to do it. They told me not to tell them, just wait until after we close the financing a few weeks later and then make the change. But I couldn't do it. I felt like if I did that, they would never trust me again.
Right.
And so I went and I told them, and guess what? My lead investor backed out. Mm. So my lesson is not, don't tell them. Right. You might think that would be my lesson. My lesson is make sure you have people who will really stand behind you, right, that really believe in you. And that was a very hard lesson to learn as well. But I did it. I'm still glad for what I did. The guy who joined as our VP of engineering, by the way, his name is Jim Dye. We are now working together for the third time because he was there through our exit. He then went on to Siebel and then Demandtech and took them public. He then started his own company that we became his first investor in, which was acquired by Coupang 3 years ago. No, more than that. It's probably 5 years ago. Became their CTO, and when he left there, joined us as a venture partner in our firm. So that relationship never would have happened, right, if I hadn't done something that I knew I needed to do.
Sure, sure. Gosh, it's been a pleasure having you on the show.
Thank you.
And I hope to get to see you again sooner than later.
You will.
Thanks for joining us today.
Thanks for having me.
Folks, thanks for joining us. We will see you next time. Bye-bye.